GM, let's take a look at the market's reaction to the interest rate cut, which we got yesterday. So, Bitcoin has continued its bearish pattern of reacting to the downside to September, October, and now the December FOMC. That may change, but so far, bearish reaction. Gold has continued with the bullish reactions to the interest rate cuts. Stocks, they're flat after the December FOMC, and the dollar is actually down. So interesting dynamics playing out over here. When we zoom into the 1 hour, what did we see? Well, on Bitcoin, we had the interest rate cut decision over here. We initially pushed up, but rejected at that yearly open level. Sellers came in. We saw buyers tried to push price up, but they failed, and that then led to the other side of liquidity getting hunted, and that's since pushed down. And we're now consolidating below the monthly open over here. So the month for Bitcoin is currently actually sitting flat and just about red on low time frames. So at the moment, we need to see, was that liquidity grab over here enough for some sort of reaction to the upside, or do we need to continue lower on Bitcoin here? And when we look at the wider markets, it's interesting because you see gold actually with that bullish reaction now climbing, hence why Bitcoin's had that short-term bearish reaction. You've got the stock market actually above the December FOMC level. So again, another divergence between Bitcoin and the stock market. You're seeing that stock outperformance, and I think that's simple. I think that's what I talked about yesterday. Bitcoin has been rising due to pure short squeezes, not necessarily underlying demand, whereas the stock market, it's having a green year, it's December, there's reasons for traders and investors to continue bidding, continue buying the stock market. It always has that underlying demand. And that in crypto is known as spot demand, if you like, for another term, which Bitcoin just currently doesn't have. Because when we look at the order flow on Bitcoin, what have we been seeing? If we zoom out over here, well, throughout this generally rising market, you've had open interest declining. So that means futures positioning has been closing on net. So less interest in the futures market. And if the market's rising, that means it's predominantly shorts closing that are pushing this market up. And yes, the market is attempting to sell off multiple times, but every time it tries to sell off, it's meeting a passive spot demand, so limit orders, despite seeing this spot CVD selling at the market. You're seeing perp CVD generally flat. So again, that's the shorts getting squeezed. That's why you actually see this divergence where generally it stays flat, but in periods like this, you actually see perp CVD rising and spot CVD down. So spot selling at the market, perps buying at the market, because this is just a short squeeze and isn't actually underlying demand for Bitcoin besides the passive bid over here. So for Bitcoin, it's really important that it actually holds these higher lows if this is going to continue squeezing higher. So ideally, you want to see Sunday's low actually not get touched over here. And the ultimate invalidation would be this low over here at 83.8K. I don't think Bitcoin wants to take that liquidity if it is going to be bullish. I think if you do actually come down to this liquidity, then it's much more likely to be breaking to the lows and potentially even then breaking down to new lows and looking for a new leg lower to find demand, because it's these higher lows, that passive spot bids, so the limit orders on the market, that's been propping this market up with these higher lows. So you don't want to start breaking them, or that's a change of character, right? At most, maybe we can take this Sunday low, and that should provide the reaction if we are going to be short-term bullish here. But as I said, in an ideal scenario for bulls, you actually just want to consolidate at the highs and have that eventually set up for a breakout higher, because then you're consolidating at resistance. And what's really happening here is every time we get to resistance, bulls are aping in long way too hard, so we get this flush down, but the flushes are leading to spot demand coming in, then we push back up, bulls get overly long into resistance again, so we flush back down, spot demand comes in, and then again you see bulls getting too long at resistance. So you need to see the pattern continue of this flush just coming into another load of spot demand there, and then if you see price consolidating, failing to go lower, which is the key, then it's most likely to then actually be coiling up for some sort of breakout because of the dynamics over here. So, barring that, failing that, of course, scenario, start taking liquidity, then this is actually much more likely to break down, in my opinion, and all just be one big bearish consolidation after what we know has been a downtrend. So, trend is your friend, high time frame, until you see the signs of short squeezes coming in. So, that's what I'd be looking at. I mean, maybe players are rushing to sell over here, and there is just too much supply, and people aren't hopeful that we're going to see 100k, 108k, 115k to get some sells in. So maybe they're panicking and they're selling early here, and that leads to us actually going down. I think this is going to all shake out very soon. So that's the analysis of Bitcoin. Obviously, stock market, it's different because it does have that passive bid. You do have a reason to just continue bidding this market, as I said, because it's had a green year. People are in profits. Bitcoin's not had that green year, and that's why you're seeing stocks above the December FOMC level, while something like Bitcoin is actually way below it and now actually below its monthly open. So Bitcoin's been great for shorts. Like, a lot of people look at that as a bad thing, but no, as a trader, amazing setup showed up there. So yesterday we was looking at this chart on the 15-minute. This was FOMC interest rate cut. I drew out a bracket from FOMC, pushed up initially, and we lost the yearly open, and that was the trigger for bears. So talked about this in the Discord yesterday. I said we got the initial breakout from the FOMC bracket over here on the left. Bulls needed to get above the yearly open. They did, led to a nice squeeze, and they needed to hold above 94k, which they couldn't. So we tried to get back above the yearly open, back above 94k, failed. Bears actually got priced back inside the bracket, which I said should lead to a move back to the initial interest rate decision level. And that's exactly what happened. You had this Coinbase buying, very heavy buying, which was healthy. Volume was rising, price was rising. But as soon as that stopped happening and price wasn't respecting the volume rising, those buyers were just primed to get wrecked over here. If you can see, volume rising, volume rising, volume rising as price rises at the same time. Yes, that's a bullish thing, but if price then disrespects it by closing below it and pushing down through all of it, that is your clearest signal that we're actually more likely to break down, and this is bearish because supply is outweighing and overplaying all of that bullish buying, which puts all that big bullish buying offside, which sets up those big moves where you can see this catalyst to really spring lower. So, well, that's exactly what happened. As I said in the Discord, we started closing back inside of this bracket, and then that led to a move back down to the FOMC level and an eventual breakdown. So that's the initial reaction on low time frame to FOMC. As I said, from a high time perspective, now you just want to see where can the demand come in for Bitcoin. Can we build that higher low? As I said over here, this is a range for Bitcoin, which I've drawn out. Question is, can we keep forming these higher lows? If so, then it looks like we can coil up really for just a squeeze, and this is just all chop for eventual move higher whenever that comes. But if we do start breaking down and this does get choppy, then I think we're heading back to this discount zone, to the lows, where maybe there's a long trade in there, or maybe we do just break down, as I talked about earlier, because you're having that change of character, and we are in a high time frame downtrend, and we do have relative weakness to the stock market. There is still no signs of demand coming in yet on the high time frame for Bitcoin, and that's because it takes time. Go to something like the daily. We've simply just not consolidated for long enough to have any confidence in saying that yes, this is high time frame accumulation. We're coming off a literal 3-month distribution and downtrend, so markdown, breakdown. So you need at least 3 months of sideways to counteract that, and we are literally, since the bottom so far, local bottom, 20 days in. So patience is the play. Bullish scenario, how this could all play out would maybe be some sort of sweep and looks like some Wyckoff reaccumulation structure, and then eventually go for a breakout. But again, this is going to take, at least 3 months. The same time we spent distributing over here should be the same time we spend at least reaccumulating if there is going to be a sustained leg higher. And this isn't guaranteed. Maybe we do just break down and have to do this from a lower price. And maybe this is just the initial rally of the first reaction Bitcoin's had at the 80s. Time will be telling for that. And until then, we just trade the markets, trade the ranges. Beautiful setups over here that I've been mentioning. So if we get some of these out, these were the paths that I mentioned on yesterday's video. to look for on the FOMC, and we basically got the red path. So it was this sweep, all of these highs come back down. So offered some great moves, great volatility there. Now, question is, where do we go from here? Are we maybe going to go for a push up, short squeeze, or are we just going to continue breaking down? And if we go back to the data and go a little bit lower time frame here, let's take a look at what we've been seeing pre-New York session, because New York session just kicked off right now. Let's do a little pre-New York outlook, or live New York outlook if you like. So positions have been building in this consolidation at the lows here. So we are coming off an impulse down after the interest rate cut decision. We'll mark that level out over here. So it's live TA right now. This is how I'd be analyzing the market day to day. That's what all these videos are. It's just simply my analysis of the markets that I'd do anyway. So this will give you a little insight into what I would personally look at and how I'd personally chart things. So FOMC level over here, that's going to be a key level, something to watch. And if we go to something like the 15-minute, what we're seeing is in this consolidation, so this sideways action over here that we've been seeing since the lows, and that's between 89.3 and 90.5K, open interest has been rising. So from the bottom, let's take a look. Open interest has actually risen 2.3%, 6,000 Bitcoin positions opening here, both long and short. Whereas price has stayed pretty much flat, right? So price is only up 0.4%. So one side of this positioning is going to be wrong. And when one side of this positioning is wrong, because it's built up so much and price hasn't moved, eventually it's going to lead to a potential nice move up or nice move down. So I think there's some gaps above here. If we go now back to the 1 hour, what can we see? Well, there are some gaps certainly here that can be targeted. So if we do actually break higher today, can see price fill into some of these gaps. Maybe we back test that FOMC level. And if you see price showing signs of slowing down, that can set up a nice short over there. Maybe that goes as high as the FOMC level. If you see that generally rejecting and sellers showing up again there, that would be a good place to look for potential short setups, because that's where we know bears have been in control. So if they stay in control there, it can just be a bearish retest, right? And we're just going to squeeze out some of these shorts who are a bit late here, who haven't taken profit. Of course, to the opposite nature, if we actually flip that level and consolidate above it, well, that's going to be more indicative of bulls in control, because you're accepting above it, right? Instead of rejecting above it or at it, you are now building price action, building positions above what was a bearish level. And that would be more inclined to actually then go on and squeeze to the highs. So those are the two scenarios I'm looking at. To the downside, if we do just go lower, I think that key level is this Sunday low, that weekend liquidity. I think that's the target for bears if they are just going to be in control from here. And, on any of these rejections, if we do get a push up, or maybe we just reject from here, this would be the level where I'd be watching for reaction at. Do we see some sort of bounce off this liquidity level? If not, then you're at risk of taking some of those high time frame higher lows that I talked about over here at 83K and below. So that's what I'd be looking at in terms of Bitcoin. You got this Sunday liquidity as the target for the bears. You got this gap as the target for the bulls, and the FOMC level as a target for the bulls. And they're the levels to look for reactions at, whether bullish or bearish, depending if we reject or flip them. And it's especially because we got all of this positioning build up over here. So let's see. If we start climbing up, do you see open interest dropping? So shorts getting wrecked? If so, once the shorts stop getting wrecked, what happens? You get this big blast up. This was all distribution, and you're looking at this, shorts are getting wrecked the whole time. So eventually, once the shorts are all out and they've been taken out of the markets, price ends up going lower. But it can be choppy, as you can see. It's not just straight down. You have to wait for your system setups. You have to actually have that market plan as I've laid out here, and it would be, waiting for some kind of false breakout. If I get these plans back on that I've been mentioning for all week. This is Trade of the Week from Sunday's video. Make sure you check it out. High time frame analysis of the markets. I'd be looking for some sort of false breakout again at the highs. This would be really nice because it just messes up traders here. They don't know whether to get bullish, bearish, bullish, bearish. And overall, you're just in that premium zone, the high risk to reward zone for shorts. And you're just at resistance where people keep getting long into. So if you see the signs, see the setups, that would set up a short for me. Maybe we get the orange path if it's a harder squeeze. But until then, maybe this actually comes from a lower high and we actually get the bearish setup there where we can look to fade the gap fill, as I mentioned. So that is the market. If we take a quick look at Ethereum, see if anything's going on over there. Of course it is. Well, Ethereum has been a little bit more bullish than Bitcoin, as you guys know. Been talking about ETH quite a little bit. So let's actually put the daily 12 and 21 EMA bands on. So let's find them here. We'll get the 50-day EMA on as well. Let's actually go like this. Let's go like this. And we have the bands on. There we go. What you can see is ETH has actually rejected at this 50-day EMA over here, which it previously rejected at before. So yesterday's video, I said we need to flip and hold this level because we've not been able to do that previously in this downtrend. And so far, we couldn't flip and hold it. Lots of buys would have triggered there, but that's been again flushed down. So it looks like it's too early for ETH. And again, maybe we are just going to coil up here. And this is what you'd want to see. Price just consolidate and then build for a short squeeze higher. Or if we do start taking the liquidity, then we're probably heading just to make this some sort of range if bullish. If not, go for actually some sort of breakdown. And that's what I'd be looking at on ETH. The consolidation gets choppy. That can result in it being bullish overall, but got to wait, got to be patient. At the moment, the 50-day EMA is holding as resistance until it's not. Until you get back above it and actually have a change of character and hold above it, that's what has happened. That's where bears and supply has showed up and overwhelmed price. So that's what I'd be looking at in terms of Ethereum. A little bit stronger than Bitcoin in the short term, building those higher highs. So interesting on the long side, ETH, but can it get above that 50-day EMA, that all-important level, and actually change things up here, or do we need to continue ranging? So that's the full market update, guys. Appreciate you all supporting the channel. Love each and every one of you. Over 600 subscribers now. Absolutely G. So let me know if you enjoyed this video in the comments. I'll see you guys in the next one tomorrow. GM.